Hello, everybody. Welcome to another episode of Arthur's Roundtable. We're super happy that we've experienced a lot of people engaging and sharing with others. And so I just want to say a big thank you and grateful for that. We're happy to have Eric with us today. We're going to talk about a subject that is near and dear to many people's heart. And it also is timely, being that Bitcoin has sort of stabilized, so to speak, and at a number that people are curious about. And so we're going to talk a lot about that today. So Eric, thanks for doing that.
Yeah, Arthur, thank you for having me on.
Yeah, you're welcome. So let's start at the beginning. A little bit of your origin story, if that's all right.
Sure. Out of college, I got my degree in education, music education, taught in public schools for about 3 years. But I come from a family of business owners. And so pretty quickly, it became evident that that was not going to be a match for me. So I left, got into the financial world in around 2005, and much better fit. Basically just learning how to be a registered rep, selling commissionable proprietary mutual funds. Didn't know any different. But as I grew over time, I started studying economics and what was going on with the US dollar, the gold standard. That was always fascinating, but I could never figure out a way to merge that parallel track with my business, where I was still selling, fee-based mutual funds and that sort of thing. And so I put that problem aside, continued growing my business. Around 2017, I opened my RIA, which then became ultimately Veritas Bitcoin Strategies. I started out with Veritas Wealth Management. And somewhere around 2023, I was growing tired with just, selling commoditized products, financial planning, ETFs, mutual funds, and I wanted to be able to set myself apart, realized Bitcoin was, for me, the solution to the problem of going off the gold standard in 1971. And that happened for me around 2023. So started really focusing on that. Still couldn't figure out how to merge that with my RIA business. But then when the ETFs came out, and especially the downside risk mitigated Bitcoin ETFs, which I don't know how many people know about those, but I was just able to really focus on Bitcoin, the economics behind it, figured out a way to talk about it inside of my RIA and really educate people on the economics, the monetary theory that drives Bitcoin, and then ultimately moved into the family office space, figured out that the retail world was not as much of a match as a sort of institutional, higher level family office world.
Well, they write bigger checks too, right? Yeah.
Yeah, that's also true. And I think once they understand something, they understand it. And that's that.
Yeah. So I'd love to talk about the added value, let's call it that, because if you're kind of interested in Bitcoin and you're a family office and you're executing on an asset class that you or your family made their fortune, you tend to stick with that just because you do what you know. And then the farther away it gets from people with a matriarch or patriarch asset class that made the money for the family, the more likely that people are diversifying into other things. I mean, that just is it's not true in every case, but it seems to happen a lot. Like if you're a third generation family member, you're not necessarily still executing on the asset class that made the family the money, and you might be inclined to hook up with a registered investment advisor and start diversifying your portfolio and that sort of thing. So I'm generalizing, but I think maybe we can start with, okay, you can just buy Bitcoin and hold it and forget about it, or you could do other stuff. So let's talk about what the other stuff is, and also talk about custody and all that, because it's really important, right?
Yeah, really important. That's one mistake that I will see family offices make, is they can drop $1 million on Bitcoin, no problem, and head to lunch, buy it at Coinbase or on Binance. But I've talked to family offices in that kind of a position and asked the question, who holds your keys? And sometimes they'll scratch their head metaphorically and go, huh? What do you mean? What's the key? And that can be a very dangerous position, because if you don't have your keys, that's your 12-word seed phrase that gives you access to your Bitcoin. If somebody else gets those.
I'm sorry to interrupt there, but that seems very pedestrian. Is it because somebody in their office that manages the other assets hold those keys?
It depends on the setup. Somebody at Binance that I spoke to in New York one time didn't know that Binance held their keys. They didn't even know what keys were. So, and I think it is pedestrian, but it's a sign of the times of where we're at in the adoption curve. I think sometimes family offices will buy it just out of FOMO, and they'll go, well, we got to get some of this and just, see what happens, sort of a thing, but not realizing the level of asset that it actually is and the care that it does require. So Yeah. So that's what I see Coinbase. Sometimes guys will know that if you buy it on Coinbase retail, that you don't actually own your Bitcoin. Coinbase owns it. You have a sort of claim right to Bitcoin.
Yeah.
Sometimes they know that you have to buy it on Coinbase institutional to protect yourself in that regard. But it's just like a matter of not knowing what questions to ask per se. But I also think it's a reputation problem. Bitcoin gets lumped in with cryptocurrency all the time.
Yeah.
And so people think of it as a sort of casino asset, not really understanding why it emerged, what it was designed for. They just think of it maybe making a quick buck. I don't know, which is sort of counterintuitive to how family offices operate. They'll give a ton of care to studying AI, private equity, real estate, but then just buy Bitcoin with no study at all. It's quite an interesting phenomenon, actually.
Yeah. I don't want to pick on any single platform, but like if somebody just went in and bought Bitcoin on Robinhood, for example, is it the same thing? You have a claim against what they have?
Yes, because you don't own your keys. That I know of on Robinhood. They don't give you your 12-word seed phrase. Then yeah, Robinhood holds your keys. Now, I don't know if on Robinhood it's exactly like on Coinbase. Coinbase retail, it's written legally into the contract that if Coinbase goes down, they have your Bitcoin. They own your Bitcoin. Now, Robinhood, who knows? I don't know, but
Yeah.
I don't study those platforms too much other than to know the sort of dangers of them, because I recommend people actually move away from those platforms.
So let's talk about the very basics, right? Okay, you can just go buy Bitcoin, put it in your wallet. You have it. I forget. I have one of those wallets where you just download it, and make sure that
Onto your phone.
Well, you have an app on the phone, but it's
Mhm.
I'm struggling for the name of it.
Like a hot wallet?
Ledger.
Oh, a ledger. Okay.
Yeah. So is that a better way to do it?
It can be. Sometimes it is, sometimes it isn't. CoinKite, for example, is a wallet brand. Well, they produce seed phrases through their device, and they have been the industry standard in security for a number of years. But it was just recently revealed that one of the CoinKite devices had certain insecurities within it that allowed people to be able to guess the seed phrase,
The backdoor
even though the
thing? Yeah.
sort of a backdoor thing.
Yeah.
Ledger has had information leaks. And so it's hard. So, okay, if we break down the difference between single signature custody and multi-signature custody, that's where the security starts to really increase. So if you got single signature custody, you have one 12-word seed phrase produced by Ledger, Trezor, Cold Card, whatever. Those are your keys. You got $100 million on there. Somebody get your 12-word phrase. That's it. That's all she wrote. But you can also have a multi-signature setup, which is far more secure. So now you have 3 keys or 5 or 7 keys. Let's just say 3. In a multi-sig setup, somebody needs any 2 of those 3 keys to be able to access the Bitcoin. And so I can generate those 3 keys from 3 different devices, maybe one from Ledger, one from a hot wallet, one from Cold Card, and then store them in different places, maybe one at the attorney's office, one in my safe, one down at the bank. Now you're talking much deeper layers of security. Even if CoinKite or Cold Card gets hacked and one of those keys is compromised, doesn't matter because somebody would need both of the keys.
Like two-step factor authorization or something like that. What do they call it? 2FA or something like that?
Authentication. Yeah.
Yeah. It's super interesting.
It's a layer of redundancy in that way, sort of similar in concept to two-factor authentication. Yeah.
So if somebody was just long Bitcoin, is your firm, for example, doing active management or recommending that they might harvest more return by actively managing Bitcoin? Because the argument, and I'm not trying to be negative, I'm just saying, if you're sort of long Bitcoin and you feel like it's, you're going to allocate a little bit of money and just forget about it, is that a bad idea?
No, I think it's a good idea, depending on who the person is, if it's appropriate for them. But I discourage trading, getting in, selling high, buying low, that sort of thing. So yeah, my firm manages people's long on-chain Bitcoin as opposed to Bitcoin ETFs. We manage Bitcoin ETFs as well, but long on-chain Bitcoin. And there's a few things about it. It's definitely a buy and hold play. A couple of things. So first of all, something that a lot of people don't know about is that you can utilize tax loss harvesting with Bitcoin. So, and what that basically is you buy $1 million of Bitcoin, it drops to 900,000. You can sell it immediately repurchase and take that $100,000 loss against something else on your
Other
tax
income.
return.
Yeah.
Other income. That's right. And you don't lose any of your Bitcoin. So that's a service that we provide in the management of on-chain Bitcoin. And I think the other thing about that is if it's like a do-it-yourself versus having a specialized person to hold your hand. Because if you buy $1 million in Bitcoin and it's a drop in the bucket to you, maybe it's no big deal that it drops by 60%. But I don't know any family office who really wants to lose 60% of $1 million, even if it's a drop in the bucket. And so I think what's important is I think people need somebody like me to help them understand where are we at in the 4-year cycle. Is this thing dead? Should we just sell it and cut our losses? Or is this actually a really good time to buy? Are we on schedule? What else should I know? That sort of thing. So yeah, I recommend long holding, but trading definitely not as a part, because I don't think it makes sense to sell a winner to buy a loser, i.e. sell Bitcoin to buy fiat currency. Fiat's a guaranteed loser. Who knows what Bitcoin's going to do? I can't make promises, but we know fiat is just going to continue to lose value over time.
Yeah. Just by virtue of inflation, even if it's
Yeah, absolutely.
So
by
I
design.
like the tax loss harvesting because that's been even in traditional asset classes, it's a big deal, right? To be able to map that out and take advantage of it in the context of everything else that you have. And even the biggest firms have struggled with that over time. They may have solved it now, and many of them have, but it's a really interesting play.
Yeah.
And of course, everybody wants to know, okay, so what's going to happen to Bitcoin and how effective, it's probably not the right word, but it really is suggestive of what happens, that the big whales can impact what's happening with the price of Bitcoin. Because while it represents a big number in some people's eyes, it's a fraction of the overall total amount of assets in the world, right?
Yeah, that's true too. Yeah, Bitcoin's a $2 trillion asset, but not even that much right now, but the world is worth nearly a quadrillion. So yeah, we're looking at a tiny, 0.02% of the entire world's percentage of assets. So we got some potential room to run there, I think.
So do you get paid and you don't have to disclose anything specific, but are you getting paid like, okay, let me watch this for you, and then I'm going to get an AUM fee and that sort of thing? Is that how you get paid?
Yeah, that's exactly right. On the on-chain side, I'll describe my ETF strategies, but on the on-chain side, I'm going to watch it for you. I'm going to recommend that people buy if it takes $100,000 loss. We tax loss harvest. Hey, pop another 100 in there while you're at it, or whatever the dollar amount is, and then just charge a basis points AUM fee. That's right.
Yeah. And so if you listen to guys like Saylor, what do you think of Saylor's strategy, if you don't mind sharing?
I think it's brilliant. I think he's pioneering something at the corporate treasury level that nobody thought to do. And I think that he's so far ahead of any other company that nobody's going to be able to catch him. There are all these treasury companies emerging, but it doesn't look to me like they're going to be able to buy as much Bitcoin as he's bought. I just think he's setting the pace and setting the tone. I think it's going to win huge or fail huge.
Right.
If Bitcoin if Bitcoin fails, or if Saylor does something stupid, the thing could fail. Yeah. So time will tell. But if he's so backed by Bitcoin, 700,000 plus Bitcoin, that to me looks strong. Yeah.
And the same argument for someone that is novice is, okay, why should I pay Saylor? What if he's long Bitcoin from a treasury's perspective, even though he sold some recently, and I don't really understand that or know why, and it doesn't matter. But then why don't I just buy and hold, and why pay him? Why pay him to do that?
Yeah. I mean, that's a really good question, depending on, I think, a person's objective. And it depends on the stock that you're going to buy from Saylor. If you're going to buy MSTR, what you're buying there is added volatility and added potential upside. That stock is probably going to perform 1.5 to 2x better and worse than what Bitcoin does.
Right.
Traders will buy it because they don't care about Bitcoin. They're trading off the vol and buying options on it, making money that way. If you're going to buy Stretch, STRC, that's like a really popular stock. What you're buying there is stripped volatility. At least that's the thesis, because as of late, Stretch dropped from its $100 par and I can't remember what it's at now, but the idea was, hey, we'll take, strategy says we'll take on the vol. You take a money market like asset, even though it's actually a preferred stock. And we've seen that it doesn't behave like a money market. It's got some risk in there, but that's kind of the idea. Now, I'm not saying people should or shouldn't buy strategy, but that's why somebody would do it, because they have a different objective than just merely holding long only Bitcoin. There's arguments on both ends. We hold a little bit of strategy in our downside risk protected Bitcoin portfolios, but a really small percentage, because I don't like that much counterparty risk and putting my faith in one man. I want to put my faith in Bitcoin, the
Yeah,
trustless asset.
even if it's a big balance sheet, it's still counterparty risk, right?
That's exactly right.
Yeah. And so I mentioned this to you prior to us hitting the record button, is I have a bunch of friends that are just maximalists. I mean, they're not selling their Bitcoin. And there was a time, I could get this wrong, Eric, so forgive me, where you could stake it and you can't really stake it anymore because it's not that interesting and people are staking other cryptos. Is borrowing against your Bitcoin still a strategy that makes sense?
Yeah. As far as I know, you can borrow against it with a few services that offer that. And I'm not super well versed in it. I don't do it myself. I don't necessarily have a need for it. But I think borrowing against it potentially answers the question of, what do I do with this Bitcoin in 20 years? Because you can't spend it. But so there's a few different directions we could go. First of all, you could borrow from your Bitcoin, get fiat, and pay back the proceeds with your returns from Bitcoin if you believe that it's going to go up. That's the idea behind borrowing. But here's the other thing. Payment rails for Bitcoin are rapidly coming up and running. So the merchant square, you ever go to a food truck and, tap your debit card, 4 million merchants nationwide use the payment app Square. And that's Jack Dorsey's app, and he's a huge Bitcoiner. That app allows you to pay in Bitcoin. So I actually think you're going to be able to spend your Bitcoin at some point in the future. You can today. You can go buy a burrito and use Bitcoin.
I don't know why you would, but that's a whole other discussion, right?
Yeah. Well, I know exactly what you mean, because you don't want to part with your stack, right?
Yeah, it's like you don't want to, snort your own supply. It's kind of like that, right?
Right.
Yeah.
Here's the kicker about that. You don't get rid of your stack. So you're going to pay $20 for your burrito. You had that in your checking account already. You send them 20 in fiat. The app converts it to Bitcoin and converts it right back to fiat for the merchant. And somebody might ask, well, what was the point? The point was they bypassed the banks and credit card fees of 1% to 3%, which is killing margins for restaurants and other businesses. So that's why Bitcoin.
Does that math work? Are the rails less expensive?
Yeah, they're far less expensive than credit card fees for sure. Because it's a Lightning transaction, and Lightning is really cheap.
Yeah, because there was a lot of things that were built on ERC-20, and the gas was just, I know they've mitigated some of this stuff, and I've not kept up to it with it. But, everybody was bragging about how cheap Ethereum was, and it wasn't, right? By the time you got with all the gas fees and so forth, right?
I see why you asked your question then. Yeah, that makes sense. That's worth looking into. But as far as I know, it's a lot cheaper than credit card fees.
Yeah. So if somebody came to you and said, look, I don't know what I'm doing, but I feel I need to be in the asset class. And if I lose it all, it's fine. What type of strategy? I mean, it's not a fair question because you can't make decisions in a vacuum, but let's just say the other asset classes are in good hands and they just need to make an expression, right?
They just want to drop some change on Bitcoin because they feel like they want to be a part of it.
And like they want to miss something, right?
Yeah. Yeah. Well, I would just, run that person through this exact same suitability questions and interview process that I would with any client. Make sure they're a good fit for my firm, all of those sorts of things. That has to be in place. It actually becomes really important. What's the rest of their net worth look like so that we can make an educated decision? But let's just say that they sort of pass all the tests and it makes sense for them to write a check for $10 million in Bitcoin. What I would do then is I would assess do they have an investment policy statement? Do they have a board? That they, what are all the barriers here? Or is it just a single guy who's ultra high net worth? He makes the calls. We don't have any barriers, that sort of thing. But once we figured all that out, what I would do is discover, do they want full on-chain access to on-chain Bitcoin, i.e. you're actually owning real Bitcoin with all of the volatility? And is that backed by their understanding of Bitcoin's thesis rather than just pure FOMO, which would indicate they're thinking of Bitcoin like a casino asset? If it's pure FOMO, I'm going to want to educate them, take them through my presentation. I have a Bitcoin 101 presentation because really you need to know what you're buying. And I can't in good conscience help somebody buy something that they don't really understand, not with an asset like Bitcoin. So I want them to know what they're holding. And then depending on what we would discover from there, I would probably recommend that some of the money go into my downside risk mitigated ETF portfolios, because not a lot of people can stomach a 60 to 80% drawdown no matter what. So it's just
Emotionally.
what's that?
Emotionally. Yeah. Emotional.
Emotionally.
Yeah.
That's right. So it's just a matter of finding out what's right for the client, what they're after, what they're looking for.
And so let's talk about the ETF strategies. How have you constructed those?
Yeah, those are made up of 1-ish% Bitcoin treasuries like MicroStrategy. The vast majority, and then maybe 8-ish% of spot Bitcoin ETFs, which those experience full Bitcoin volatility on both the up and the down. And then the vast majority is downside risk protected Bitcoin ETFs. Some of those have a 0% floor. It's like a fixed income annuity or fixed indexed annuity where you have a cap on the upside, maybe 10.5%, but it's a 0% floor. So you're going to not lose hardly any money. Or maybe there's a 10% max loss or a 20%. And so we put a mix of those together. We have 4 different portfolios depending on your risk tolerance. And so that's how those work. We cut the volatility out of Bitcoin by about 75% on average, to where we're getting about 25% of Bitcoin's losses and gains.
And so it's like a credit trade, right? Like the balance sheet trade for what the banks do regularly, but you're using a third party ETF in those?
That's right. Yeah. And the ETFs, especially the risk mitigated ones, are trading options inside the ETFs to cut that volatility. Yeah. So that's how that works.
And what are I'm not asking about your fees, but what are the fees? Because ETFs are notorious for having low fees. If they're doing active derivatives inside this, what's the friction like? Is it 2%, 3%, something like that?
Nah, it's like 60 basis points.
Really? And they could do all that trading with 60 basis points?
Yeah, as far as I could tell, we ran numbers on the fees, and all in the fees with my 100 basis points fee is 160 bips total. So yeah, and that's the portfolio fee itself with all the ETFs combined, about 60 bips.
Yeah, super interesting, right? Because the market, even though it's small, has matured considerably in terms of your options and what to do. So mirroring more traditional finance type toolbox, right?
Mm-hmm. Yeah, that's right.
Yeah. So let's move to the Clarity Act. What do you think about that?
I think Bitcoin, I don't have an opinion per se on the Clarity Act. I think Bitcoin is going to carry on no matter what happens in either direction. But I do know that anytime there's legislation that's positive or negative, well, even negative, it doesn't matter. I think it's good for Bitcoin because it just gives people more of a sense of, hey, what is the government going to do on this? So it's like if you got your segment of the population who are total cowboys, in the sense of they say, okay, let the government completely ban Bitcoin. What are you going to do about it? I'm going to hold Bitcoin. How are you going to enforce it? And they're fearless. That's a very small percentage of the population. So they don't care if Clarity passes, if the ETFs show up. They are just going to buy Bitcoin and, hole up. But the vast majority of people are not like that. So when the ETFs came out, a lot of institutions, their blood pressure dropped considerably.
Yeah.
So any type of clarity, like the Clarity Act, I think will just continue to press that forward. Now, having said that, I don't know a whole ton about the Clarity Act, but that's generally my thought on legislation.
Yeah, that's helpful. And this is just anecdotal experience. The people I know that are Bitcoin maximalists always seem to have plenty of money to do whatever they're doing. And maybe it's idiosyncratic to their fact pattern and lifestyle and that sort of thing. But are you finding that when they're maximalists, they're largely saying, I'm never going to sell my Bitcoin? Are they just, it's not unusual for even traditional finance to borrow money against your founding shares so you can increase your lifestyle or buy the big house or whatever it is. Is that essentially what you think they're doing? Is they're not selling Bitcoin usually, they're just hypothecating it. Is that true?
I honestly don't know. When I go to Bitcoin events, I don't know if it's an unwritten rule that I just am following, but we don't ever get into, hey, what are you doing personally? It's more ideas, what's happening with Bitcoin, that sort of thing. I honestly couldn't even speak to it. I've known hundreds of Bitcoiners, and I can't think of a single conversation that got that personal now that you asked me that question.
Yeah. Yeah, I've got that personal because they're friends of mine. So
okay.
I'm basically articulating what they've told me is that they're going to sell their second or first child before they sell any of their Bitcoin. So they got to figure out some other way to hypothecate for cash flow, right? Because if you
Yeah,
sit, there's no coupon on it, right?
there's no coupon. That is the part that I do hear all the time is that, they'll sell their second or first child, they'll sell their house, they'll sell whatever before they part with their Bitcoin.
Yeah.
That's
Yeah.
exactly right.
It's super interesting. It's clearly, Eric, you're focused on Bitcoin. Have you thought about Ethereum and any of the other cryptocurrencies in your practice?
I have in practice. No, not in my practice. Where I came from when I got into Bitcoin was I just thought about it like a cryptocurrency. And I originally was thinking about it like, wow, this is a cool asset that you can make a lot of money in. Even though I had a pretty good handle on the monetary thesis of Bitcoin, I was ambivalent. On the one hand, I had clarity on why we went off the gold standard, why Bitcoin fixes it, et cetera. On the other hand, I was buying Doge and other cryptos. And then at some point, I realized, no, Bitcoin only for me. And then I gained even more clarity on the why. So the reason that I don't incorporate ETH or Solana or other cryptos, my general thought is that the vast majority of other cryptocurrencies are scams and rug pulls. They're like a function of the fiat system. There are obviously other cryptos like ETH that are not that. But the thing that I care about the most is the impact of a broken money system on the advancement of the world for the past 6,000 years. Like the world has advanced really, really well, and we've invented the airplane and the internet and the car. But the way that I think of it is that advancement happens in layers. And so every time mankind opens up a new layer, solves a problem of like air travel, then it frees us up to now view the next problem that we didn't know existed. And so Bitcoin, as I have to be careful in how I word this, but it's designed to solve the problem of broken money for 5,000 to 6,000 years. I think that's what I'm most passionate about because the money being broken has caused so many problems for so many people, not just in our country, but worldwide. And my heart is for the people who are the poorest among us, who I think suffer the most through a broken fiat system and corrupt governments who benefit from printing money. That's all I really care about at the end of the day. So other cryptos don't even try to think about that. And that's okay. They have a different objective. But for me, Bitcoin is where it's at just because that aligns much more with my identity religiously, spiritually, emotionally. It's just a much better fit for me. So that's why I'm so passionate about Bitcoin. And that's why all I do is Bitcoin.
Yep, totally makes sense. I like it. It's, there are many people that I know that jaw a lot about Bitcoin, but have never read the white paper. It's super interesting. And I mean, even if you do read it, you may not necessarily understand it, but if you did read it and tried to get an understanding, it's pretty brilliant, right?
Yes.
And, there's a lot of smart people in the world. And whoever wrote that obviously was deep thinking. What do you think of, the Sailor said something really interesting. He said, someone asked him a question about if you want to build wealth, should you buy your primary residence and should you buy commercial real estate? Should you be private equity and that sort of thing? And he said, look, all those things that you need, that if you were to buy them as asset classes, require a fair amount of knowledge, talent, execution, and risk mitigation. So you have to really, real estate is a great asset class, but you really need to know what you're doing, right? You can't just wing it. I mean, you can wing it by writing a check to a real estate fund, and maybe that's the way to go. But what he was saying about Bitcoin is that there's so many people that just don't have the ability to learn something deeply enough to invest in it, that Bitcoin solves that problem for many, many people. That was his thesis, is that like all those asset classes have their place, but you really need to know what you're doing. And he wasn't suggesting that you don't need to know what you're doing with Bitcoin. He just said that it was just more available to so many more people because you don't need to know how to run a hotel, right?
I see. Yeah, from an operations point of view or just whatever.
Yeah.
Okay, I think I might know what he means by that because I think what he's thinking about, now if I ever meet Sailor, somebody can bring this to him and he'll tell me if this is what he meant. But I think he might be saying, so somebody asked him, aren't you afraid of not diversifying? And his answer was, do you use several knives? Do you drive down more than one street at the same time? Which logically doesn't make sense because you physically can't do it.
Right.
But he's like, how many chairs are you sitting on right now? My kids like to watch this techno version video of this. How many chairs are you sitting on right now? And then the techno song dance plays and they dance. His point was that once we've discovered something that accomplishes the actual objective, you don't need several different chairs in your office because the one does the job. And so if we take that concept over to the concept of money, the reason, again, I'm just saying what I think Saylor might be saying. Some of this is my belief too, is okay, my whole industry of financial advising in part exists because of inflation. And that means broken money, money that's designed to lose value over time. So I have to turn around and sell stocks and bonds and real estate and gold and asset classes to overcome people's portfolios draining value and purchasing power. So stocks have become, and real estate, for example, is no longer just something that you live in. It's something that you use to beat inflation. It's a store of value. Well, if Bitcoin is a superior store of value, which Saylor argues that it is, and even a superior currency, then in principle, it solved the problem of having to pour all of our excess money into our 401ks and stocks and bonds to try to beat inflation in a world where Bitcoin has become the superior money and the superior currency. Now, that assumes that it's taken out the dollar. This is me talking. Taken out fiat altogether, and now we live in a world where Bitcoin is the world reserve currency. Everybody uses it. In that scenario, there's a lot of assumptions. Bitcoin would have become far less volatile because an asset's volatile when it emerges, right? But later on, the volatility smooths out quite a bit. It's like if I were going to wire my house, I would need a ton of specialty and knowledge that I just don't have right now. Liken that to the volatility of Bitcoin and how do I buy it and custody it, et cetera, right? I'm cruising for a bruising if I wire that house badly. But once a pro comes in and wires it, my 3-year-old can turn the light switch on and off with no problem. I think what he might be referring to is a vision where Bitcoin is mature and has come into its own. Anybody can buy it and use it. That's like a 3-year-old turning the light switch on and off. You don't have to know a lot at that point in history. So it seems like that might be what he's getting at.
Yeah, it might be. I think that one of the things he was referencing is doing the math. Like if you buy a big house in Florida, there's a 2% annual tax. And that is another thing that's working against you to thwart some of the growth that you would have in the asset class. And then, so you've got the tax, you've got the insurance, you've got all this stuff that is friction against the growth of the asset class. And well, you could argue that the volatility of Bitcoin may offset that friction as an asset class. It may not, right? I think that's part of what he was getting is that to own Bitcoin, there's no real estate tax, there's no insurance costs. There's probably a little bit of that if you want to somehow insure it, but it was
not
just
like
saying,
real estate though.
Yeah. There's frictions that you have to overcome with, for the way to overcome it was commercial real estate is the rents, right? And then the underlying value increases and that's how you make your money. But you have the rent offset the basically carrying costs of the asset. And he's saying, whereas Bitcoin, there's no carrying cost, right?
Yeah. Essentially. That's right. Yeah. And now I know the argument that you're talking about that he was making. And another point, a couple of points that he made is with a commercial building like in Midtown Manhattan, those buildings are designed to last, I don't know how long, 100 years or maybe 500 years, but you've got rust, decay, whatever the word for that is. They could get bombed by, if the U.S. ever gets attacked. He's talking about Bitcoin being an incorruptible asset in the sense that it's not materially present. So you can't corrupt it, you can't destroy it, really, unless you take out the entire internet worldwide. And we could debate about how possible that is. I don't think that's possible to do.
Yeah, I want to talk about that because there's those that argue against Bitcoin or digital currency. Meanwhile, we run on digital rails with everything, right?
Yeah.
But if the grid goes down and people are looking for food and guns, kind of Bitcoin becomes valueless if you can't, use it, right?
Yeah. I mean, that's right in theory. But I think the counter to that, because you're right, if the grid goes down, we have way more to worry about than just Bitcoin. We can't swipe our debit card. All of our Google Drive stuff is going to be maybe at risk. So a lot of the world uses the digital world. And what I noticed is there's an inconsistency of objection. Nobody objects to putting their stuff on Google Drive because the grid might go down. And so it tells me that because they object to Bitcoin for that reason, that there's a more deeply hidden objection underneath that one. And I think it's actually, in many cases, the concept of money being immaterial to begin with. So even though I go to the store and swipe my debit card and don't use cash, my money right there is in principle digital.
Right. For sure.
In people's minds, though, it's still backed, as it were, by something that I could get my hands on, by the US dollar. And so switching their minds from a tangible physical asset to something which is not physical, not material, I actually think that might be the barrier underneath that they're objecting to. Like, how could it be real if it doesn't exist? But
Yeah.
by doesn't exist, meaning they can't drive to it like they could with real estate and touch it. That comes, and maybe this isn't what you were getting at, but I think that comes by understanding the properties of money itself as a philosophical entity, understanding why money has value to begin with. Why does the US dollar have value? Why did gold have value? The only way to figure that out is to understand it's not the physical nature of gold or the US dollar that gives it its value. It's a whole other set of properties that are actually not physical right now. So I think that might be the deeper discussion behind that.
Yeah, that's absolutely true. My view is a little, it's consistent with your view in that I still want my ranch with plenty of food and guns if the world goes to shit and there's an apocalypse. Yeah. So that's a good physical asset to have because I can, keep my family safe. And I don't think in apocalyptic terms in general, but, I would say that, you take care of that first and then you move on from there, right? If that's a concern for yours, right?
Well, yeah. And I don't think that the whole world grid goes down all at once and stays down. I don't think that's plausible. I think my little grid in Madras, Oregon could go down. And then I think we'd figure out how to bring it back up again. But I don't think Portland's grid and Madras and Bend is all going down at the same time because of diversification. They all run off of different power structures, et cetera. So yeah, the grid could go down. But that doesn't mean your seed phrase is gone. And it doesn't mean you can't drive to the next local town where you have internet access and still recover your Bitcoin. So it's not a fixed thing. It's like we tend to freeze and go, oh no, that world that I can envision based on my fear and anxiety is how the world will be. And it will stay that way. Right. I think that's anxiety talking, not as much a sort of calm, reasoned, thought through position.
Yeah. And look, if everything goes right, I mean, right now, Starlink stands on its own, right?
Absolutely, which I love.
Yeah. You don't have to, and, who knows what Elon's going to do next. He's talking about, power in satellites. It's a lot easier to shoot down power from the satellite than from this remote power generation station. It's all about connectivity. Yeah, we'll see. Yeah, I'm less concerned about the electronic digital nature as an objection. It's just that you hear it. And that I think you make at a good point is that, well, that's no different than using your debit card. Like, you can't go to the ATM and get cash.
Yeah, and you probably better have a bag of silver dollar or silver quarters in the event that locally you got to keep buying eggs. So yeah, absolutely. But it doesn't hurt Bitcoin as far as I can tell.
Yeah, I think you're right. Yeah. So what's a good customer look like to you? A good customer profile for your business?
Somebody who is thinking not only in 10-year increments, but really generationally. I love it when family offices bring their kids, junior high age kids, to an event and they speak about transferring this money and this mindset down to the next generation. I've been thinking like that for years, and I'm not a family office. So first of all, guys who are thinking just really long term and who are trying to do good in the world. And that's the overwhelming amount of FOs and high net worth people that I've ever met. Very few of them are jerks, And then somebody who is able to just let me be the specialist so they understand the concept of division of labor and who, not how. They don't want, if they want to become an expert in Bitcoin, great. But for the most part, they're going to hire me because they don't want to fuss with that. They want to do kind of like what you said. They want to keep making their money in the car wash business or the real estate business because that's how they know how to make money. And they bring me in and trust me. And once that vetting process is complete, trust is established. But then ideally, we continue to be friends over time and our lives it's a partnership, not as much of a transactional affair. I want to work with people who are inviting me out to their place and likewise, and they're coming out to stay with us and that sort of thing. So I'd say generally it's more of a personality profile than it is anything, but somebody with $100 million minimum is ideal.
Yeah. Super helpful. It's really, once you get a certain amount of money, you start trading your money for time because You can make more money, you just can't make more time, right?
Yeah.
So it's really makes sense to pay somebody like you to take care of it than spend the limited amount of time trying to figure it out, unless you get some entertainment or visceral benefit from that sort of thing, right?
Yeah, absolutely. And the thing about Bitcoin that I think people fail to see and understand is it's not just an asset class like real estate or stocks. Bitcoiners tend to be very universal in how they think. Like for me, I'm fascinated. I don't know if you can see my book. It's over my shoulder, the
I see
bottom
it.
one, not the top.
Yeah, and I saw it
Yeah.
on the website too. Say the name of the book so everybody knows it.
Yeah. Family Office, Bitcoin in the Family Office is the top one. Richard Wilson wrote the intro to that one. And then the one beneath that in cream colored is called The Cost of Consensus. And that one I'm particularly proud of because that comes from Murray Bowen and Edwin Friedman's work on self differentiation. And so it's the concept of defining oneself and one's ability to remain themselves under pressure, which that's a very valuable skill. And it incorporates the concept of Bitcoin as its own differentiated asset. And so my point in saying that is that as a Bitcoiner, it forces you to think differently about the whole world. Like, how do we think generationally, 5 generations out? I want to have that influence over families, not just be relegated to discussing Bitcoin because it brings in wisdom. I don't know. It's something about Bitcoin. You buy it. It's all ready for deep thinkers who are thinking like this. And then it causes you to be able to, at least in my case, to be able to advise on a whole bunch of different areas, not just an asset class.
Yeah, super helpful. I'm glad to hear about that. Yeah, Richard's a good guy. I actually interviewed him a couple weeks ago on this
Oh,
program.
sweet. I love you knowing. That's great.
Yeah, no, we've known each other for 15 years. And I also, he's a good guy. He hired Family Office Insights at one point because what we do is deal flow and he was raising money for something. And so, we have a nice relationship.
That's great.
Yeah.
He's very
So,
helpful.
Eric, let's wrap it up. And is there anything else you'd like to share with the group before we, in fact, wrap it up?
Man, we really covered a lot.
I appreciate you being on very much.
Yeah, my pleasure. It's been a lot of fun. I can't think of anything per se other than to encourage people to study Bitcoin and find out if it's something that sort of piques your interest. And if it's super interesting, you'll probably end up going out on your own and doing it. And you may or may not need me. If it's interesting enough, but if it feels like a lot of heavy lifting to continue studying it, then it might make sense for us to connect. And Bitcoin is like Donald Trump. You're on one side or the other, and there is no middle ground. So if you just hate it, then that's okay too. But at least you put the effort into at least studying what you hate.
Yeah, no, I think it's fascinating. It was a brilliant white paper, and it thought of things that deep thinkers only think of. I mean, it really, really was brilliantly written.
Yeah, those cypherpunks are amazing. They had been working on Bitcoin since 1974, although they didn't call it Bitcoin. By the time it came out, Satoshi, I think it was just each successive generation standing on the shoulders of the predecessors, trying to solve the problems that the previous generation couldn't. And so finally, Satoshi was almost the beneficiary of all of it and then released Bitcoin.
Yeah, it's often the case, right?
Yeah, absolutely. It's wonderful. One other thing I didn't mention is my website is familyofficebitcoin.com. People can download a PDF for free of either or both of my books right there. And then there are a ton of other resources as well just to help educate people.
Awesome. Thanks for sharing that. And thanks for doing this, Eric.
Thank you,
Thank you, everybody, for joining us today. And we'll see you next time.